All the profit after paying debenture interest are distributed as dividend. Means there is no retained earning. Whatever profit they have earned, it is distributed to the shareholder. So we have taken EBIT minus interest, we got value, divided by cost of equity, we will get value of equity. Value of equity plus debenture, it will be value of the firm. X is levered and Y is unlevered. Levered in the sense they have debenture. Unlevered means they don't have debentures. What is the value of the firm? Equity plus debenture, we call it as value of the firm. Warm welcome to one and all. This is your Adarsh sir here, lecturing Vidhyaashram First Grade College, the Temple of Excellence. And now we are in the session 12 of your topic called Financial Management. As I told you, two topics are there in the last one. That will be what? Your approach, Mordigling-Miller, as well as the one more approach is traditional approach. In today's session, we'll complete the Mordigling-Miller approach with 3 problems. I have problem with solution. We'll understand the concept in today's class. How to go for Mordigling-Miller 10-mark problems. Your agenda is very simple. We'll go for concept and we'll go for problems. The first one, approach. Two companies we have, X Limited, levered firm. Levered firm means what? They have debenture. Always remember, levered means they have debentures. And Y Limited, unlevered, without debenture. Without debentures, are identical in all respects except the capital structure. Their details are as under. One company X is levered and Y is unlevered. Levered in the sense they have debenture. Unlevered means they don't have debentures. Now, EBIT is how much? 4 lakh and 4 lakh. It is common for X and Y. Then we have debt, debenture. For the first company, it is a levered company, so we call it as VL. Second company, unlevered, we call it as VU. They have 10 lakh debenture, they have 0. If there is no debenture, no interest also, but we have interest of 14% for debenture. Along with that, we have equity capitalization rate of 20%. What is the equity capitalization rate? 20%. Now, these are the information we have. Equity capitalization rate also we have in this. All the informations we got. Find out the value of both the company through arbitrage process. Under approach, we have concept called arbitrage process. Now, since both the companies are identical, they should have same value. If there is any difference in their value, the same as per approach would be eliminated through arbitrage process. This is just a concept. It should have same value always. We'll go for answer. See, your EBIT is how much as per the question? Your EBIT is 4 lakh and 4 lakh. 4 lakh and 4 lakh. Minus interest. From EBIT, we are deducting interest. Interest should be calculated on what? Debentures. Where we have debentures, see. First one, we have 10 lakh on that 14%. Second one, there is no debenture, no calculation. On 10 lakh, we have 14%, 1 lakh 40. 4 minus 1 lakh 40, you got 2 lakh 60,000. Now, 4 lakh minus dash, it will be 4 lakh only. Hope you are clear? Yes. Now, value of equity, EBIT divided by cost of equity. Now, what is your EBIT? It is not EBIT actually. Your net income or EBT. EBT or your net income. We don't consider this I. We don't consider this I. Now, it will be 2,60,000. You got 2,60,000 divided by 20%, and we have 4 lakh divided by 17.5%. They are already given 20% and 17.5%. Now, so we'll make it EBT, this one. After doing this, 2,60,000 divided by 20%, 4 lakh divided by 17.5%, then you will get 13 lakh and you will get 22 lakh 85,715. What is the value of the firm? Equity plus debenture, we call it as value of the firm. Equity plus debenture, we call it as value of the firm. 13 lakh plus 10 lakh, it will be 23 lakh. 22 lakh 85 plus 0, it will be 22 85,714. That will be your value of the firm. Hope you are clear. It is exactly similar to your normal capital structure problems only. So this is called approach arbitration. Now, so we have taken EBIT minus interest, we got value, divided by cost of equity, we will get the value of equity. Value of equity plus debenture, it will be value of the firm. Hope you are clear. Yes. Now we'll go for the problem number 2, second one, approach. Now, there are two companies, A Limited and B Limited, which are identical. Under approach arbitrate process, it is always identical. Now, in all respect except in terms of the capital structure as identical below. Now, except the capital structure, rest of the things are identical. Now, EBIT we have 1 lakh, and debenture we have 5 lakh, because the first one is levered and the second one is unlevered. Hope you are clear. Yes. So we got EBIT of 1 lakh and 1 lakh, debenture of 5 lakh and dash. Rate of interest, it will be 12% and equity rate is 20% and 16. Exactly similar to your previous problem. You do it better actually. Now, calculate the value of two companies using approach as how an investor holding 10% share of A Limited will be benefited by switching over his investment from A Limited to B Limited. Whether A will remain in the A or else he will switch over to B. So the answer is like this. So we have interest 5 lakh and so these are the information. EBIT we have, it is 1 lakh and 1 lakh. After that, we have to minus the interest portion of 5 lakh into 12%, you will get 60,000. Now, from 1 lakh minus 60, you will get 40,000. 40,000 divided by 20%, it will be your answer 2 lakh. From 2 lakh, we are supposed to add your debenture value. You know that your debenture value is 5 lakh. Now, 2 lakh plus 5 lakh, you will get 7 lakh. What is the value of the firm? As per first one, 7 lakh. The same thing if you go 1 lakh, there is no debenture. 1 lakh and 1 lakh divided by 16%, 6 lakh 25 and your answer is 6 lakh 25,000. Hope you are clear. So, this is only your value of the firm. We'll go for the last one. The following is the data regarding two companies A and B belonging to the same equivalent risk class. Now, we have number of auditorial share and 8% debentures, market price per share, and profit. All the profit after paying debenture interest are distributed as dividend. Means there is no retained earning. Whatever profit they have earned, it is distributed to the shareholder. Now, you are required to explain how under approach an investor holding 10% of company A will be better off in switching his holding to company B. Hope you are clear. Yes. Now, so we have A Limited, we have B Limited. So 1 lakh, 1 lakh 50 and 8% debenture is 50,000. Market price per share 1.30 and you have profit before interest is 20,000. So these are the informations we have. Now, we'll go for this. What is your EBIT? As per this, EBIT is given 20,000 and 20,000. Your EBIT is 20,000 and 20,000. Interest on debentures. What is the value of debenture? 50,000. And what is the rate of interest? 8%. Now, so it will be 50,000 into 8%, it will be 4,000. 20,000 minus 4,000, you got 16,000. Any doubt? No doubt. Now, we got 16,000 here. After that, equity, debt and value of the firm. Every problem they used to give cost of equity. Then EBIT divided by this thing you used to get. But now what we are supposed to do? Your equity is, they have given market price of this share 1 rupee 30 paise. So number of ordinary shares are ordinary shares. It will be 1 lakh. 1 lakh into 1.3. How much we will get? We will get 1 lakh 30,000 plus debenture value 50. 130 plus 50, it will be 1 lakh 80,000. Auditory, it is nothing but ordinary shares. Now, similarly, you go for second one. This will be 1 lakh 50,000. What is the value? 1 rupee. 1 lakh 50 into 1 rupee, 1 lakh 50 itself. 1 lakh 50. There is no debenture. Your value of the firm is how much? 1 lakh 50. So your approach, your arbitrary process is very easiest one. Normally they will come for 5 or 10 marks in your examination. Now, I'll go back to all the slides. Please take screenshot. Now, so these are your information. Your solution for problem 1. Your question. Solution for problem 2. Next question. And solution for that. So this is all about your today's session. Hope you understood. This is your modeling Miller. We're done with your approach. In the next session, we'll go with traditional approach of calculation. Thank you.